All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for September 3rd. Another month. Boy, the year is going by fast. We're going to start off with a couple different ideas today. I guess there are two things I'm looking at pushing across or just mentioning to you guys. When you hear that old saying, stocks fall much faster than they go up, this causes stress and anxiety unless what? What do we do that stops this stress and anxiety? I think it's a wonderful question. There we go. Unless protected. In fact, Mary, I love it even. Perfect. Short answer is perfect. Unless we are protected. Now, couple things I got to remind you. Do we make penny for penny on the way down? What do you think? Do we make penny for penny on the way down? Ooh, William says yes. Anyone else want to give a try? What do we make penny for penny on the way down? No, not usually. Even near expiration, you probably won't make penny for penny. And the answer is no, because options have deltas and it is in, gotta type correctly, and it is in your best interest to start at the money, which is basically just saying that T key just doesn't work because you don't want to overpay in case you are wrong on the direction. So someone asked the other day, Kevin, what if you have, come on, expensive puts like NVIDIA, and you pay $9 at the money, and it only moves down $9 when the puts expire. What do you do? An example is if you bought $120, let's say you bought $120 long puts, you paid $9 for them, so they cost you $9. Let's say NVIDIA only goes down to 111. Every penny you paid for those puts, every penny for those puts was used up in the premium. What do you do? Abraham, I expect you to possibly know this. Bill, Lee, you've had the education. William, you've had the education. Stuart, you've had an education in options. Bosserman, maybe not so much, but you're willing to take a shot at it. If the stock goes down, every penny that you paid for that protection, what do you do? If the premium you paid for that protection as all the stock went down, what do you do? So very interesting one, Abraham. Expiration enough to allow for time to be in your benefit, plus timing when the exit selling long-term call to cover most of that put cost. So there you go. So Abraham's saying, hey, if you're starting to get hosed, sell a call to help pay for that put. You could have also said sell a put to help pay for the long put. Another idea, well, let me put both of those in. Sell a call or put to offset the cost. Another idea, convert the put value into shares. The whole idea is to make up something on the way down and to convert it to shares so that when it goes up, it'll go up faster for you, right? I mean, when it comes down to it, the whole Hurley Investments or Warren Buffett trading, investing is to buy more shares in downward moving markets so that you get explosive results when the shares come back. I mean, that's the whole premise behind all of this. With that said, right now, Apple, Meta are the two most common came back stocks. The ones we are waiting on, Baidu, actually, you know what, that should say this, Bank of America's come back. Ford came back nicely. Apple, Meta, Bank of America, but we're waiting on Baidu. In fact, there's quite a few that we're waiting on, but I probably need to get to Baidu, Disney, Google L, but not really. Micron definitely. Nvidia definitely. Square definitely. Under Armour definitely. Yes, I did see that one. Target definitely. So yeah, I mean, there are quite a few that some of us have been waiting on for quite a while. So that's the premise to what we do. With that said, what does it look like in real life? Well, Nvidia took a shellacking today. On shares of stock, Nvidia took $9.53 or an $11.37 loss, came out to a daily change of $6,822 on 600 shares. Thank goodness our puts. Our puts on the daily change made $5,400. We're still upside $1,422. Thank goodness our calls made up $723. Right now, if we're looking at puts in general, 700 divided by $682, we made up 89.8% of the downward movement today. And a short answer, because we have protection in place for some stocks, we want the bottom to fall out on those positions so we can add many more shares. How cool would it be to see Nvidia head down to like $70 a share when we have the right to sell it at $56 higher? Boy, we'd pick up a ton of new shares on our put protection. Our goal right now is to see the bottom fall out. Kevin, you did not protect everything. And two of you asked questions, and again, great questions. Not a problem at all in asking them. But two of you asked, Kevin, you didn't protect Apple today, and we struggled with it. When we look at Apple, the reason why we didn't protect Apple today is because it came right down to the 50-day and bounced off. That is why we protect Apple. It came right down. You guys want to be able to see that, right? Let's make sure. Audience view. Yep, you guys are seeing it. It came right down to that 50-day. And bounced higher. The 50-day is holding for Apple. We would love to see a bounce higher tomorrow. If it breaks the 50-day, we're adding protection on Apple. Kevin, you did not protect Google. Doesn't that chart look familiar? In fact, let's change the chart so you see it just a little bit better. Let's change the chart to 3 months. Clearly, almost touched it to the penny. Right on down. The low was 156.48. The 200-day is 156.30. We missed it by 18 cents. So that's how close we are, and that's why on Apple and Google, we took our protection off. And again, same type of thing. Low is 217, which is actually below the 50-day of 221.73. But Apple has billions of dollars, and someone's picking up Apple shares at the 50-day simple moving average. Wouldn't surprise me if it's Apple. So that's why we're sitting back and why we're waiting on those couple. All right. See what else I had in here. The big picture, very interesting. The big picture is talking about what am I trying to say? The big picture no longer thinks we have a soft landing on the horizon. That's the short answer. Investment strategy predicts or suggests dividend paying stock, but the short answer is a slowing economy led by a slowdown in consumer spending should lead to a slowdown in earnings growth, which to them is an outright recession. So our soft landing is somewhat, well, the soft landing is off the table for briefing.com. I have an interesting article that basically the short answer is nothing's changed. We should still have a pretty good year going into this year. And we should see a pretty good comeback in stocks, especially your growth stocks, which are the Magnificent Seven. There should not be a concern here. Interesting, I've heard a lot, and I'll just make this comment. See, let me go back up here. I've heard a lot of money managers say the market isn't acting like it should. Now, just need to make the comment. Worst month and third worst month in the year for the markets are September followed by October. It's a seasonal cyclical, runs in cycles. It never changes. We thought, well, we had such a nice run up that maybe things would keep going. They didn't. We only had a little over 1%, what, 1.95%. August, but some things certainly moved quite a lot. Some things did not. Technology is one of them. Technology had a pullback of about what, three and a quarter almost. So the NASDAQ did not run positive in August. But that doesn't mean it's doom and gloom for everything. In fact, NVIDIA had a great earnings report. Micron had a great earnings report. They just didn't surprise as much as the whisper numbers or the analysts expected or wanted. It's kind of a self-fulfilling prophecy. They can beat it up now so that they can go and do better in the last quarter of the year. So that was pretty interesting. I thought that was very interesting to see those money managers not know the cycles of the stock market. I would expect that they would. All right, to look at our markets in general, last week we were bullish. We are still technically bullish on the Dow Jones Industrial Average. We have not had a crossover yet on the RSI. Definitely, if you use the 5 and the 20, the 15 and the 30, we don't have a moving average crossover, nor do we have a crossover on the MACD. So technically, we have a downturn, but we're not bearish on the Dow Jones Industrial Average. On the S&P 500, don't have our crossovers here either. But something that's really important, we're right up against the 50 line. This is where we see these bounces. Here was a huge bounce. It'll be interesting to see if it's a buy the rumor, sell the news for the rate cut coming up. But yes, we are still technically bullish on the S&P 500. And if we take a quick peek at the NASDAQ, we definitely have crossovers to the downside. We are breaking the 50-day, which means we're probably heading down to the 16,233. We do barely have a crossover on our MACD. So from week to week, we were bullish last week. Technically speaking, we are definitely bearish on the NASDAQ this week. We most likely will get a test back down around that 200-day simple moving average for no other reason than that's how markets work. They test those lows. And Abraham just made a comment, I agree 100%. Still, we're not in a crazy liquidation mode. We're not there yet. I wasn't happy with our futures after hours. After hours, we were pretty flat on our futures. Well, the Nikkei is just dumping today. But our futures are down. Right now, the futures are down 0.02 for the Dow, 0.11 for the S&P 500, 0.20 for the NASDAQ futures. So kind of garbage, but garbage in, garbage out. You take what the market gives you and you react accordingly. This week, kind of a big week again. Kind of a big week for, not really for earnings, but for the average work week numbers. And dang it, I did not finish our economic reports for the average work week. I should have done that. But typically, when you're looking at average work weeks, you're going to have the unemployment rate, you're going to have the for crying out loud. Can't believe I did not finish that. Big ones, here we go. Going to have your non-farm payroll. Going to have your private payrolls. You should have unemployment report, unemployment rate is what they call it, hourly earnings. Those are what typically run in your average work week. So that would be the expectation for the end of the week. We might be able to justify a 50 basis point rate hike if we see just some horrible employment numbers. Horrible employment numbers, we might get 50 basis points on the 18th. Very interesting. The yield curve is no longer inverted. But Kevin, an inverted yield curve denotes a recession. It's happened every time before. I understand that. I understand an inverted yield curve is a predictor for a recession until it's not. And for the first time, I'm going to tell you, I do not see a recession anywhere on the horizon. It's just not there. There's no expectation for a recession that I can see or that I can justify for you guys. I just don't see it. It's not, it doesn't resonate. It just, I can't make the numbers justify a recession. So for those that are a little worried, we're in a recession, we're in trouble. I don't want to say don't worry as much, but what I can tell you is the numbers don't add up right now that are justifying or letting me see a recession somewhere on the horizon. I just, for the life of me, I can't work out those numbers in any way, shape, or form that justify recession and off we go. So yes, it always happens until it doesn't. Be willing to see the future for what's right there in front of you. A very self-help, interesting article, and I threw this in here only because, well, let me just find it. I thought it was pretty interesting. There you go. 95% of people believe they're self-aware, but only 10 to 15% genuinely are. So my self-help is right now is to be more keenly aware. My wife says about 85% of the time you are, but the other 15% of the time that you're not, you're really not self-aware of anything. Kind of hurt my pride a little bit there, but it is what the wife says it is. Interesting article for Hope. Chart analysts see encouraging signs for the stock market slash or comma NVIDIA despite September's poor history. Again, all we're talking about is a bit of a pullback before we can take our next leg higher. That happens all the time. So here's an article to read on that gives you a better understanding. And I just thought this was interesting. You're going to have to follow the link. CNBC Pro Mike, and I don't know how to say the last name, on getting the most out of options and how to trade during market turbulence. I think it's very interesting because if you read through this article, it's all about protecting. It's all about using the long put. It's all about doing exactly what we've done through volatile times like earnings. All of a sudden, CNBC thinks they've got this great new information for people. Folks, we've been doing it for 18 years. There were a couple years where things didn't make sense and some things have not run like they're supposed to. But boy, just to put this into perspective, Disney's highs were up at 208. And Disney right now is nowhere close to 208. Pretty interesting that there was the freak am I trying to say? There was an interesting show on CNBC talking about how far and how quickly Disney can run. All right, let's see what else. Boeing up to 400. Baidu up to 350. Disney, again, as I said, 208. Google's there. There's nowhere to really talk about Google. Bank of America could run up to 55 again, pretty easy. JP Morgan's pretty fully valued. Meta can get up to 621, but I think it's 558 are our previous all-time highs. Micron trading at $88.58 can get all the way back up to 151, previous high a month ago. NVIDIA 108, previous high at 141, which means Micron actually was 157, previous high. Square 109, trading at 64. Target 150, I'm pretty sure that traded upwards in that 240 range. Under Armour, $27.50, trading at $8.20, up 51 cents today. Verizon should very easily trade at $52, and nice to see Verizon up $1.12 today. So there's a lot of upside potential, even though it doesn't look good right now. If you're protected, keep the expectation when the market goes on sale. Look to see things fall as far and as fast as they can. What questions do you guys have for me? What questions can I answer for you guys, or that you guys can answer for me? That you guys can answer for me. That I can answer for you guys is the way that should have been said. Any questions you guys have for me that I can answer for you? And let me know, did I answer your question, William, on what to do in regards to, hey, what if what you paid for the long put finishes right at what you paid for? Because again, rarely if ever does that happen. So we're kind of talking about black swan events. But boy, what we paid net for $8.94, last traded at $18.55. We took $2.94 of credit. Someone paid us $2.94. We could sell it back to them for 97 cents. So I think, very rarely, I can't tell you a time that that whatever you paid for that put, that it finished at expiration being down that exact amount. But now you know what to do if it does, right? All right, other than William, I don't see anything else coming in. If there are no other questions coming in, thank you for attending us today. Hopefully you guys had a wonderful Labor Day weekend. We will not be doing a trade findings and adjustments for this week. It's a shortened week, and in all honesty, we're probably expecting new money to come in a bounce pretty quickly. So if we get that bounce, I mean, our next expectation to get a 1-2 day bounce, a dead cat bounce is what we would call that. As the market gets a little cheap, some people jump in, we run it that day, maybe 2 days, maybe 3 days to the upside. Then we protect as we go through that historically weak September. All right, guys. Hey, appreciate your time. Thank you for being with me. You guys have an excellent evening, and we look forward to seeing you next Monday night. Good night, everybody.